The man who controlled America's economy is gone. Alan Greenspan dies at 100. For nearly 2 decades, one man held extraordinary influence over the world's largest economy. His words could send stock markets soaring or tumbling in a matter of minutes. Investors analyzed every sentence he spoke. Presidents sought his advice. Central bankers around the globe watched his every move. That man was Alan Greenspan. Now, one of the most influential economic figures of the modern era has passed away at the age of 100, bringing an end to a remarkable chapter in American financial history, a century that changed the global economy. Born on March 6, 1926, in New York City, Alan Greenspan grew up during the Great Depression, an experience that shaped his lifelong fascination with economics and financial stability. Although he first showed exceptional talent as a musician, playing the clarinet and saxophone professionally, his passion soon shifted toward economics. He earned degrees from New York University before becoming one of America's most respected economic consultants. Few could have predicted that this quiet economist would eventually become one of the most powerful unelected officials in the United States. The man who led the Federal Reserve. Everything changed in 1987. President Ronald Reagan appointed Alan Greenspan as chairman of the Federal Reserve, America's central bank. Just weeks after taking office, disaster struck. His first major test, Black Monday. On October 19, 1987, global markets experienced one of the worst crashes in history. The Dow Jones Industrial Average plunged over 22% in a single day, still the largest one-day percentage drop ever recorded. Many feared another Great Depression. Greenspan responded immediately. He issued a brief but powerful statement promising that the Federal Reserve would provide enough money to keep financial markets functioning. Those few words restored confidence. Banks continued lending. Markets stabilized. The crisis was contained. It was a first glimpse of what would become known as a Greenspan put, the widespread belief that the Federal Reserve would step in whenever markets faced severe trouble. The most powerful central banker in the world. Over the next 18.5 years, Greenspan served under 4 U.S. presidents: Ronald Reagan, George H. W. Bush, Bill Clinton, George W. Bush. Very few public officials have enjoyed such bipartisan trust. During his tenure, the United States experienced the longest economic expansion in modern American history, rapid technological innovation low, inflation strong, employment, growth, the rise of the internet economy. Wall Street came to view Greenspan almost like an economic oracle. Whenever he testified before Congress, markets around the world reacted instantly. Even slight changes in his tone could move billions of dollars. The era of Greenspan speak. Alan Greenspan became famous for speaking in a style that economists jokingly called Greenspan speak. Instead of making direct statements, he often used extremely complicated language. One of his most famous remarks was, "If I seem unduly clear to you, you must have misunderstood what I said." That wasn't just a joke. Greenspan believed central bankers should avoid creating unnecessary market panic. His intentionally vague communication became legendary, and even today, central bankers carefully choose every word they say, helping build America's longest boom. Throughout the 1990s, the U.S. economy experienced explosive growth. Technology companies transformed the world. The internet connected billions of people. Productivity surged. The stock market climbed to record highs. Many credited Greenspan's careful management of interest rates for helping sustain the boom without triggering runaway inflation. His reputation reached almost mythical status. Many newspapers described him as the maestro, suggesting he conducted the American economy like a world-class orchestra. But success brought new criticism. As the dot-com bubble grew larger, some economists warned that stock prices had become dangerously inflated. Greenspan himself famously questioned whether investors were showing irrational exuberance in 1996. Ironically, the market continued rising for years afterward. When the bubble eventually burst in 2000, many argued that interest rates had remained too low for too long. Yet Greenspan's greatest controversy was still to come: the shadow of the 2008 financial crisis. Although Alan Greenspan retired from the Federal Reserve in 2006, Many critics later argued that some of the policies implemented during his leadership contributed to conditions that led to the 2008 global financial crisis. Low interest rates, rapidly expanding mortgage lending, and limited regulation of complex financial products all became subjects of intense debate. In 2008, Greenspan admitted before Congress that he had found a flaw in some of his long-held beliefs about how financial markets regulate themselves. It was one of the most remarkable moments of self-reflection ever witnessed from a former Federal Reserve chairman. Even today, economists continue debating his legacy, loved, criticized, and impossible to ignore. Few economists have generated as much admiration and criticism as Alan Greenspan. Supporters argue that he helped prevent multiple financial crises, kept inflation under control, guided America through decades of prosperity, modernized central banking. Critics argue that interest rates stayed too low for too long, financial deregulation increased systemic risk, housing bubbles expanded under his watch. Some warning signs were ignored. Both perspectives continue to shape discussions about monetary policy today. Influence beyond America. Greenspan's influence extended far beyond U.S. borders. Central banks across Europe, Asia, and emerging economies studied his decisions closely. When the Federal Reserve raised or lowered interest rates, currencies, bond markets, and stock exchanges worldwide often reacted within minutes. His policies affected everything from mortgage payments in America to investment decisions in Asia and Europe. Very few economists have ever held that level of global influence. Life after the Federal Reserve. Following his retirement, Greenspan remained active as an economic advisor, author, and speaker. He published several best-selling books, including The Age of Turbulence, the Map, and the Territory Capitalism in America, co-authored with historian Adrian Wooldridge. Even in retirement, investors continued listening carefully whenever he commented on inflation, interest rates, government debt, or financial markets. Tributes from around the world. Following news of his passing, economists, former policymakers, business leaders, and financial institutions paid tribute to one of the defining figures of modern finance. Many remembered him not only as a policymaker, but as the individual who transformed the Federal Reserve into one of the world's most closely watched institutions. Regardless of whether people agreed with his decisions, few question his enormous influence on global economics, a legacy that will be debated for generations. Alan Greenspan's legacy is unlike that of almost any other economist. He presided over incredible prosperity. He navigated historic financial shocks. He influenced trillions of dollars in investment decisions. Yet he also remains at the center of debates over financial regulation, housing bubbles, and the causes of the 2008 crisis. History will likely remember him as both a brilliant central banker and one of the most controversial economic policymakers of the modern era. Final thoughts. The world has lost more than a former Federal Reserve chairman. It has lost a man whose decisions shaped interest rates, financial markets, global investment, and the American economy for nearly 2 decades. Whether viewed as an economic genius, a cautious steward, or a controversial architect of modern finance, Alan Greenspan's impact on the world is impossible to erase. For millions who lived through the booms, the crashes, and the transformations of the late 20th century, one thing is certain. The man who once controlled America's economy is gone, but his influence will continue to shape economic policy for generations to come.